Hello dear traders, and welcome to the third episode of the Trading Forex Scanner Masterclass. In the first episode, we gave a brief overview of the different components here on this window. Then on the second episode, we looked at the charts and identified the trend, support and resistances. Now in this episode, I will introduce you to the concept of a lock candle. What is a lock candle? So before explaining what are those types of candle, it is important to understand what is price action. The price action is the analysis of the chart using no technical indicators, meaning no Fibonacci retracement, no oscillators, no MACD, no moving average, simply by looking at the charts. And what do price action traders look when they look at the chart? So we look at different candles, their size, their types, as well as their formation. 2 candle, 3 candlestick formations, different patterns, support and resistance. It is okay for price action trading to draw on the chart different support and resistance, trend line, ranges, channel. Those are just visual indication to organize your analysis. They are not oscillators. They are not based on any technical indicators such as oscillators, such as moving averages. And this is what we draw here automatically thanks to the scanner. We have the support and resistances, we have the range, we have the trends, so that we can identify immediately the trend of a particular currency pair without having to look at it for too long and spending too much time on the analysis. On top of that, when we look at the candles in a downtrend, obviously since the trend is going down, this means that either we have more bearish candle than bullish candle, and we may have bigger bearish candle than we have bullish candlesticks. This is a simple logic. Since the market is going down, then we need to have more candles going down than the one going up, and sometimes both of them are true, and bigger candles going down than candles going up. And I'm going to explain you both cases. As you can see here, we have a lot of candles going up. We have less candles going down, but they are much bigger, so the market will continue to go lower. In such a case, we have also how many candles going up? We have few here, but in a matter of 2 candles, the market still continue to go down. This means that if you have a much bigger candle going down than a lot of candles going up, you might see a bearish engulfing and the market will continue to go down. The second case is that you might have few candles going up, but then much more candles going down. So we will look at other examples as well. Let's find another currency pair in which it happened. We have a lot of correlation here. Let's look at the New Zealand yen that has as well a downtrend. So as you can see here, we have as well 1, 2, 3, 4 bullish candle, but then we have 1, 2, 3, 4, 5, 6, 7, and then it continues. So you might have bigger bearish or you might have more bearish candle, resulting in the market going down. However, there are certain candles that are extremely important because they may mark a confirmation of the trend, either being the uptrend or the downtrend. And those candles are called the lock candles. This is a concept that was created by us through many years of analysis, including machine learning technical analysis, which conducted in identifying a certain type of candlesticks that they represent a strong confirmation of a particular trend. And those candles are called the lock candle. Why they are the lock candle? Because when they happen, many times they represent a point of non-return in the trends. Let's have a look at the Australian yen. So once we have the downtrend starting from here, initially we have a lock candle with its opening and its closing. Then the market is going up. This means that this first lock candle is not valid and we have to wait. Once the lock candle becomes valid, then you have a confirmation that the trend is healthy. Let's have a look at this lock candle. This lock candle here, this is the open. This is the middle, which is extremely important, and I will explain why. And this is the close of this lock candle. And as you can see, the prices here are having a very small pullback, which remain way below the middle of the candle, and then the prices continue strongly in a downwards movement. So we have a confirmation that this lock candle is valid. Then we have the third lock candle, and as you can see, the bearish momentum is very strong following this valid lock candle. Then we have another one. As you can see, the lock candle are usually much bigger, double in size at least of the previous average candlesticks. As you can see here, they start to be small, we have a little bit of uncertainty, and then boom, we have a bearish engulfing here with a candle that is double the size of this previous bullish candle, marking an initial confirmation of a bearish downtrend. And this bearish downtrend is confirmed here because we have a very strong downwards momentum here that is confirmed by a new lock candle. As you can see here, we have some uncertainty with some doji candle. They have a very small body and they only have shadows here as well. You start to see that the candles become lower, and then again, boom, a strong candle that is gonna break out a new support in such case. Then the market makes a pullback, which touch exactly here the open of this candle, making it still valid, and then it is confirmed again, and we have a new bearish momentum. Here again, we have a new lock candle. What happens here? The price retrace, breaks the open, however stays within the resistance, which make this lock candle semi-valid because the prices follow, they stay under the resistance, however they failed to remain below at least the open of the lock candle. And in such case, we have certain levels of signals confirming if the trend is very strong, or start to lose strength and become weak. In such case, since we had the uptrend continuing, this lock was absolutely not valid. This one is extremely healthy, and as you can see, we have a very strong movement following it. This one is very healthy, not as healthy as the second one, because if the price remains below the close, then it's extremely strong, such as this case. If the price stay and rebound until the middle, it is very healthy. It is very good as well. And if they rebound until the open, then in this case, it is normal, it is healthy. We might see it continue, not in a very strong angle, but the downtrend might continue, which is the case here. As you can see, the space between the first and the lock candle is not as strong at all between the second and the third lock in this case. And now, as you can see, it is breaking the open. So in such case, it is not valid. We just have to be cautious. The trend follows since the resistance is valid. However, the lock candle here is not valid. We have out of 4 lock candles that helps us identify that the strength remains healthy and gives us entry opportunity for these downtrends. Let's have a look at another example here in the dollar yen. As we can see, the lock candle, we have a correlation in all of them showing us that is not time yet to enter. We have a second lock candle. As you can see, the price here are touching the open, which makes it healthy. And as you can see, the price immediately continue within the downtrend. We have a third lock candle in which the price come and test the middle, which makes it as well very healthy. And we have a strong bearish momentum. And finally, we have the fourth lock candle in which the price stay below the close. And as you can see, immediately it doesn't fail. We have a strong following of the downtrend and a strong bearish momentum that comes here and marks new low and break out the range. Let's change a bit the currency, because you might think that if we only look at a very strong or very weak currency pair, we will look at a healthy trend, but we will choose an Australian that is at minus 4.5. And let's have a look at, as you can see in the Australian CAD, both of them are negative, are weak, so we can't. Australian Swiss franc, what do we have here? We have the supports going down, the resistance as well going down. So overall, we have a quite healthy trend. The initial lock, once again, is not valid. The second one, as you can see, the prices here failed to retrace even to the middle of the lock, and what you have after that, you have a very strong bearish momentum. So this lock candle has been validated. Then on the third one, what do we have? The prices here are testing, however they breaks the open, so it's not valid. we can be patient as well. A good trader is a trader who knows as well when not to trade. And then the fourth one is perfectly validated to the middle, and then it comes again and breaks the close. This will be the good entry point when it breaks the close of this lock candle, such as in this case. In this case, it didn't get to break it, so we wouldn't enter anyway, and it is followed by a strong bearish momentum. Australian yen, we saw it already. Let's have a look at some other ones. Australian dollars are both weak. Let's have a look at a Euro Australian. In this case, since the Australian, it's in the quotes side of the currency pairs, we have an uptrend. The first lock is not valid. The second one is absolutely valid to the millimeter. As you can see, the prices come and rebound to the middle here, the yellow bright lights, and then followed by a very strong bullish momentum. So we have an absolutely beautiful bullish signal. The third one, once again, have this breakout of the open, so we would leave it. And then the fourth one, it is also broken, and as you can see, the market is showing uncertainty because the euro is not that strong as well. It's only at 1.5, so maybe the euro is losing strength, and in this case, we would have had a beautiful signal, and we would have left the market breathe in such case until we have some new signals. So this is how you identify potential entry points thanks to the power of the lock candle. Then in the following video, I'm going to show you the very importance of identifying the long term against short term trends. Until then, I wish you a happy trading. Bye bye.